Alright guys, this is Abi Forest here. Today 10th June 2026. Yeah, I'm going to be discussing about cryptocurrency, commodity, stocks, stock indices and the rest, gold and the rest. Now, looking at what we have on our screen right now, the US stock market is bleeding. And why is this? Is because now if you look at it very carefully, we have the electronic technology that is actually ruling the market, the likes of Nvidia, the likes of Broadcom, Micron, AMD, Apple, Intel, Dell and the rest, all the semiconductors. Because of this AI boom, many companies are trying to embed AI in their systems and their structures. And I want you to note that whenever there's a new technology, especially when there's a new technology, you can look back into history when the railroads came into existence, when electricity came into existence, and also when let me just say internet, far back as the year 2000, 1999 stroke 2000s from history. You notice that whenever there's a new invention, markets are going to react to it. There's going to be hype, into this type of technology. People are going to accept it. Then a reality check is going to come up or come in between those periods, such that you find out that the market will start coming down, because people will believe that it's a bubble, and bubble is meant to be burst. You understand? So they'll say the bubble bursts or bubble hype. You understand? But this AI, you can't compare this AI boom into what has been happening before. There are different things, especially when the internet age came into existence in year 20. There's been internet for years, but when it was commercialized was in year 1998 stroke 2000. It was the military, the United States of America military, that are making use of this internet to track whatever. Then before it was being commercialized, such that every companies, every organizations started embedding internet into their systems and structures. So there was this hype and there was a burst then, and before the recovery phase happened. Now back to AI. People believe that maybe the AI is just a kind of bubble, that maybe the hype is over. That is one of the reasons why you notice that the market is going down. It's a belief anyway. But I want you to know that market does not move in a straight line. Market move in waves, fractals, higher highs and higher lows. For everything that goes up is going to come down. So even for the fact that it's coming down, for those that missed that trade, is an opportunity for you to join the train when the next impulsive move wants to start. It's an opportunity for you to get into, you can't buy at high price. From what we've learned in technical analysis, at that point that the market is going up higher, you can't buy, because you don't know when the market will start retracing back, which we call price correction or retracement. The market is going to come down, and once the market comes down, it's giving you an opportunity to join the train, the moving train. So that's what I see about it. And coupled with the fact that the SpaceX IPO that wants to be launched by Elon Musk on June 12th, 2026, because so many people have actually invested in stocks, in cryptocurrency, into commodities, gold and the rest. So they are taking profits such that they can be able to get themselves involved in this new IPO. They don't want to be left out. But I already did a video previously to caution us about joining into new IPOs, because I want you to go and watch that video so that you can learn a thing or two before you can understand this. So if you look at all the market that we have, you find out that all the markets, in fact Dow Jones has increased this morning like 0.17%. Now if you look at what we have here, let's go into this market. We have the Dow Jones. Let's see what the Dow Jones market is doing this morning. All right, so starting from the Dow Jones, which is the Wall Street 30 largest companies in America, you notice that it has increased in value for like 0.17% as of today. But if we look back to what happened on Friday, if you look at what happened on Friday, the market has been going up higher, and in just one candle it raised all the gains that's happened in the last 9 weeks. Because we look at, not up to 9 weeks anyway, if you look at it, it has actually created a new high, a new all-time high. It break the former all-time high and created a new one, but now it has come back to retest that former all-time high, so which is an opportunity for people to join the train. That is for Dow Jones. Now if you look at Nasdaq, which is the US tech companies, the first 100 tech companies in America, the market was going up higher. If I look at it by the weekly time frame, you will find out that for straight 9 weeks there was a bull run for straight 9 weeks, and investors are cashing out for straight 9 weeks. There was no red candle. The market was booming, was going up higher. People were shouting AI, this, that. But little did we know that the market moves in fractals and moves in waves, higher highs and higher lows. We call it market structure. We also call it order flow. People have been expecting this pullback for a very long time, and the pullback didn't happen because of the quarterly earnings that came into play of all these hyperscalers, these mega stocks like the Nvidia and the rest. There was higher than expected quarterly earnings that happened, so the market was ripping higher. It blasted through the former all-time high and created a new all-time high. Investors were happy. Little did they know that they should be weary, because the market is going to retrace, going to give a kind of structure before other people can join the train and move up higher. That is how the market is always been structured, and this is for Nasdaq. Now looking at S&P 500, which is the top largest 500 companies in America, did the same thing. After the war, when the war started, the market went down for like 6 weeks, then coinciding with when there was quarterly earnings of these hyperscalers, and when the quarterly earnings came out, it was favorable than expected. People were expecting some amount of money, but it was even higher than expected. And for straight 9 weeks, the market began to rip up higher to create another all-time high. And now, for just on Friday, the market, wipes like 2 weeks profits from people, which I can categorically tell you that is like a take profit. So many people are, they are scared. People are started taking out their profit, and that's why you're finding out that the market is going down, as the case may be. So that is it about the S&P 500. Now, going to check gold. Why is gold? And don't forget that all these stock markets are meant to be reactive to the geopolitical tension that is happening in Iran, Israel, and America, but they are not. Now, looking at BTC. Okay, before we talk about BTC, let's check gold. Let's check gold and see what the precious metals are doing. The precious metals are actually melting. The likes of the gold and the silver, they are melting, because of this same geopolitical tension that is happening in Iran, America, and Israel. So we can see that after the all-time high that has been created from the beginning of this year, the war has taken out all the profits. Now we are back at the former all-time high of this new year when we started January 1st. You understand? So it has wiped all the profits, and we are expecting a more downside up to this level. So there's still more that is going to happen as far as gold is concerned, which is the precious metals or commodity. Then looking at silver too is following suit the step of gold, because they are precious metal and they are reactive to inflation and reactive to the war, because there is like I said in my previous episode, that this Middle East, majority of all these countries have acquired gold and silver, and they are using that as a general reserve in order to de-dollarize. You understand? So, but immediately the war started, there was shortage in oil supply. And they had to sell off their goods. You understand? So that they can meet their contingencies. And since then, the war has not stopped, and the market has been erasing all the profit that we have generated from the beginning of this year. That is for silver. And now let's look what the catalyst is on its own, which is oil, which is making this gold and silver, the metals, to be melting. Looking at it, you notice that when the war started, there was a bull run that created this high that made the oil per barrel to be $119 per barrel. And there's going to be escalation. There's going to be de-escalation from the American government. We're going to be having a ceasefire. There's going to be an agreement. The market keep coming down, creating a pattern which we call the pennant pattern. So we are expecting either a breakout to the downside or a breakout to the upside. So either ways, the market is going to break out from what we're seeing here. So that is a catalyst for what is happening in gold and what silver. Now back to the cryptocurrency, which is just BTC. You notice that BTC has been coming down too for quite from the beginning of this year actually. So this one can be categorized to inflation too. Before then, there's these big whales when it comes to Bitcoin, the likes of this guy they call Sailor. You understand that he sold some of his, not just Sailor, it has so many BlackRock and the rest. So there's this big giant, big fish when it comes to cryptocurrency. So I think that is having an effect on BTC too. So we are still expecting a downside technically. Looking at what we have from this chart, we are still expecting, this is what we call inverse head and shoulder on the weekly time frame. So we are still expecting a push to the downside, further push to the downside as far as BTC is concerned. So and I think that is all for now. I've explained. Now looking at DXY, which is dollar index, which is the last one I'm going to be talking about in this episode. Dollar has been ranging for quite a number of weeks too, or probably months, and it was formally at this point last week. But when the job report came out, and it was positive than expected. When the job report came out, like they were expecting probably 85,000 people to get jobs, and of course they got 175% more. 175,000 people got more jobs. They were employed. So the dollar went up higher to create what we call favorability for investors, and that on its own affected gold too. You understand? It's a catalyst for gold, also oil in this inflationary time. Oil is inflationary to gold. It affected gold and silver as the case may be. So DXY2 is usually affect gold too. That's normal. You understand? Especially if you are trading XAUSD. So that is what I can, what I see technically and fundamentally about the market. And I think that's all for now. Is there any other thing? Okay, let's look at bonds. Let's look at bonds. Let's see what's happening in bond markets and also the yield market. Right, so looking at what is happening in the bond market, bond prices is opposite to bond yields. They are inversely related. Now, if the bond prices are going down, obviously the bond yields will be going up. So in this case, the bond prices are going down, so we should be expecting the bond yields to be going up. And don't forget that the more the bond yield is going up in percentage, the more debt the American debt is being incurred. They are incurring so much debt because bonds is just like an indebtedness to investors or countries or organizations that are buying the treasury bonds of Americans. So this is the bond prices are going down right now. The prices are reducing, and also that means that automatically the bond yields will be going up higher. And because of the war and what is going up in the Middle East, and that's one of the reasons why I find out that the bond yields are going up higher. Can you see this? This is the 2-year yield of the bonds. They are moving up higher, so they are increasing in 1%. Now the bond yield is like 4.15%. I think the highest that has created when the war started is 4.20%, which means that for every bond percentages is going to be what 4.2% will be on every bond prices. That will be for anybody that is going to be investing in bonds. So you'll be getting 4.2, and because of this, you find out that the bond yields or the bond prices are less risk, and the investment is less risk. You just be getting 4.2% annually. You understand? And the higher it is, the higher the indebtedness that the American government are going to be incurring. So the price of the yields afterwards, the percentage of these afterwards come down. You understand? So that is what we are seeing, and it's as a result of the inflation that is happening because of the energy shock that is happening in the Middle East. So I think that is the same as 10-year yield, and also the 30-year yield, which is the 30-year bond and the 20-year bond. All are moving up higher. The highest it has created for the 10-year yield is 4.68%. Then the lowest, the current percentage for the 10-year yield now is 4.52%. Now let's check the 30-year yield bonds for the United States of America. Since when the war has started, I think it has gone up higher to 5.2%. And the current price right now is at 5.01%. You know what 30-year? Maybe in another episode I'm going to be explaining how bonds yields work and how bond prices work. So I'm going to see you guys in another episode. Alright, see you guys later. Bye bye.